Here we are on the pound yen 240, and this is a flag pattern I've just got involved with. It was actually about an hour ago, but I've only just got around to doing the video for it. And as you can see here, we've currently just gone into profit. We're just retesting the third test here on the bottom, and I would like to see now this break the channel and obviously make our way down to targets. This is going to be a one in, one out for me, and the reason for that is we haven't actually made a new low. So this is the structure level I'm looking at, and look at the wicks here. Okay, this is a structure level that I wanted to violate, and if we look right, we can see that we have this wick that comes down to here, and then price actually closed within the wick. So yes, we closed below this level, but because of this wick here on this red candle, this is not a violation or a break below, close below for me. So for that reason, I cannot play for extended targets. But on this flag pattern, we've come in to a 618 fib, and we have touched twice at the top, twice at the bottom, and we're now testing a third time down here. And at this point is obviously where I'd like to see the breakout. So that's the reason why this is only a one in, one out for me. But if we go to the daily time frame and just get a perspective of what the dailies have been doing, if I put a structure level on there, you can actually see that price, we had a big bearish candle there, and it was an engulfing candle, and then what we've done is we've just seen price work its way back up to the 149 flat. So I'm anticipating here that we're going to see the move due to the big lower low, lower close, the engulfing candle, and we've just kind of traded with inside that bar. It isn't a true inside bar setup, but all the candles, you know, we're making our way up there, and so I'm expecting a move lower here to potentially the 147 flat. But as mentioned on the 240, because we technically haven't had that violation, this will be a one in, one out for me. So if I just bring the orders back on, what I've done here is I've gone, here was the highs at 149 flat. You can see we tapped it and instantly reversed from there. I've gone 40 pips above there, so the ATR here is 37. I've gone 40 just to give it a little bit more breathing room. So in terms of the risk, we're looking at this. I'm going to want to make that red, and the reward is going to be here. I'm going 15 pips above that 147 flat. I'm going to make this green. So what are we risking here? 91. It's a big trade. And 135. There's only one thing I would say, and that is if you are like me and you have 100 pip maximum risk and you're scared about taking trades up to 100 pips, then you're probably trading with too much of a big the amount that you're trading with based on your account size is probably too big, because you should be able to take 100 pip trade and quite comfortably take 100 pip loss and it not affect your account balance. But for me, more importantly, it should not affect you mentally. It should not affect your psychology. You should be able to go straight into another 100 pip trade and be quite willing to lose that 100 pips again. And if it does affect you emotionally or your bank balance, then at that stage you should reduce down your position size. So here we are. We'll come back and see what happens with this. We do have dollar news out, and it probably will affect the pound and the yen, but if not, this could be a trade that goes on for a few days. And we're back. So a little update on this trade. It's very early to say, but we do seem to be pushing out of the channel. 11 pips up here. Until we actually close out this channel and ideally see these wicks here, ideally we need to break and close below them. I'm not going to class this as any kind of breakout. The time now is 9:05 at night, another 55 minutes to go until this closes. Yeah, so we rallied 60 pips into arrears. If you've watched just some of my other videos where I talk about these flags, and very often we do see a double top in them that occurs and then we get the breakout, it can offer very nice opportunities to enter, rather than entering it where I did, where I obviously hindsight is a great thing, where I could have got a better risk to reward. But you know, a key factor in this trade was this engulfing candle. If you haven't tested the engulfing candle, go ahead and do it. It's a very powerful tool, particularly when it happens at structure. And as you can see, it happened at structure. We went overbought. We've got divergence currently. Doesn't mean it's going to win. Obviously, we never know that. We just play the probabilities. And this is a very big trade. And this is the biggest trade I've had probably in the last couple of weeks or so. Yeah, and if this goes on to win, it'll make this week, well, it's already very profitable. It'll make it even more profitable. So we'll come back tomorrow now, see the update of this trade. Just a little update on this trade. Currently 60 pips up. We've now officially broken out of the channel, though we are on the 4-hourly, and this candle is only 40 minutes into its move. So no way of reducing down the risk on this trade as yet. So it's a case of just leaving this trade, and we'll look at it again at 10 o'clock when that 4-hourly candle closes. And we're back for a little update. The time is 9 o'clock in the morning. We have now officially broken out of the channel. We've seen quite a bearish move here on the 4-hourly candle. Currently 83, 84 pips up. Moving quite nicely. We'll come back at probably 10, or maybe when this trade is about to hit. We're back. It is 10 past 10 on a Sunday evening, and the market has just opened. And this is quite an interesting pair now, because we've done quite a lot. First of all, what we haven't done is hit our targets or our stop loss. So it's a shame we've not hit targets, but I'm relieved we've not hit the stop loss. But what we've actually done here is, if we just have a look at price action, and ultimately this doesn't matter too much, because we have to see if the trade hits targets or my stop loss, because they are the rules. But I do like to look at price action, particularly on the higher time frames, as it tells a story. And the story here is that we broke out of the channel, we came up, we retested this structure level just here, and then what we did is we put in a double top, and then we broke to the downside. Now you can look at this a couple of ways. There is a 2618 trade here, and it has technically already happened just here, where we pulled back and then we made a move lower to retest the lows. What we're doing again is we've actually now pulled down and retested the low here, and we failed to put in a break below, close below. And so right now we're trading between this double top and this double test down here at the bottom. And so I have no idea what the market is going to do here. If we had have broken to the downside here, I would have said that we've got a good chance of coming lower. But we're basically trading in this range now between these two structure levels. What I will say, and this shouldn't be taken as given that we're going to go ahead and reverse and hit targets, is just that because we've double topped here, then recent structure to me is the most powerful. Now a double top is very powerful because we came in, we tested that structure level. It's actually 3 times here, and we've actually held it, but we just failed to make a break below here. And I won't drop down a time frame, but just here we have a pattern. It is a flag breaking to the upside. I would like to see this break to this level, the 148.45 level, which is at just this structure level here. And then I would obviously like to see the market come down and make that lower low. What I have done is, because we've now double topped, that gives me a very good place, a very good structure level to put my stops behind. So where I had my stop, I think it was up here last time, 91 pips away, there is just no need for that now, because we've broken out the channel. We've tried to break to the downside twice, failed. We've double topped here, and this double top, which is actually now a triple structure level up here, it's a very good place to put my stop behind and now reduce down the risk. And so that's exactly what I've done. I've gone 10 pips just above the high, which is what I would do for a standard double top anyway. And we will wait and see what happens. But here's the thing, it is completely irrelevant whether this trade wins or loses. It really doesn't matter, because it's process. It's the process that we go to, and that's ultimately what makes us consistent and makes us profitable. This was a trade for 91 pips. The risk has now been reduced to we're looking at about 33, and in the grand scheme of things, is that really a lot of pips? In the last 2 weeks, not the week just gone, the week before, I made 223 pips, and I took, I think it was 10 or 12 trades. Last week I took 20 trades and I came out with 116 pips. Should have actually been 196 due to a Euro New Zealand problem with my broker, but look at those figures and say to yourself, is one trade really worth all the emotional aggro? Is it really something that should affect me when dealing with trading, particularly since it's now only a 33 pip risk? And you just have to bring things into context and just say that one loss really doesn't mean anything. Whether it's for 10 pips or 100 pips, it's completely irrelevant, because throughout my trading journey, I'm probably going to take 1 million trades. And do you think that this one trade that may go on to lose should affect me? The fact is, it's not even lost, so why should it affect me? My stop is in an appropriate place right now. I don't know which way the market's going to go. All I know is that I was in the trade, we got the breakout, we just haven't as yet hit targets, and that's it. So I'm doing this video now because come the morning we may have rallied up here and hit my stop, and so I just really wanted to show you where my stop was just before we potentially saw the outcome of the trade. And we're back for the final part of the video, and you can see now that we've actually been stopped out of this trade. So this was a losing trade for 33 pips. Just look at what we did here. We had not a momentum candle, but quite a strong bullish candle here, and we actually closed above our structure level, so indicating here, at least in the short term, that we could go a little bit higher. What happens after that, I have no idea. We could just rally all the way up, or we could actually then turn and come back down. The fact is that we never made the new low, and we broke the structure level here, so I'm very happy that I used risk management. Stopped out for 33 pips. It means absolutely nothing. I'll just put it down as a loss for those 33 pips.